You're watching the Daily Market Comment for Monday, February 7th by Raf Boyajian. I'm Christina Marujos, and thank you for joining us here at XM.com. Markets got off to a relatively calm start on Monday following a tumultuous end last week on the back of the shockingly strong jobs report out of the United States. Nonfarm payrolls jumped by 467,000 in January, confounding both the most pessimistic forecasts that the U.S. economy would shed jobs, as well as the top estimates. But the cherry on the cake for the inflation hawks was the bigger-than-expected rise in average hourly earnings, leaving investors and policymakers in no doubt that the labor market is red hot. Money markets are now pricing in about a 30% chance the Fed will hike rates by 50 basis points in March, with 5 increases fully priced in for the year. Treasuries slumped after the jobs data, lifting the 10-year yield to a more than 2-year high. The jump in yields helped the U.S. dollar to stem its 4-day freefall. The dollar index was extending its gains today, albeit at a slower pace. With an economy that's booming, the Fed is probably best positioned to hike rates very aggressively. Hence, all eyes this week will be on the latest CPI stats due on Thursday, amid the anticipation on when inflation will peak. The dollar's biggest challenge to getting back on the front foot might come from the euro. The single currency shot higher last week after the ECB president, Christine Lagarde, opened the door to a possible rate rise this year. Lagarde will be testifying in the European Parliament today, and any comments on the normalization timeline will likely spur some euro volatility. However, the euro was paring its gains today, easing to around $1.1425, even as Eurozone government bond yields maintained their ascent. In equity markets, it was a very mixed picture across the globe. UK and German stocks were in the green in Europe, and in Asia, a strong performance in China after the week-long Lunar New Year break added some support to struggling shares in the region. On Wall Street, however, E-mini futures were in negative territory, unable to build on Friday's rebound. The Nasdaq Composite perked up at the end of the week to close 1.6% higher, boosted by a surge in Amazon stock. Thank you for watching today's Daily Market Comment here at XM.com. Have a great week.